Hello, all traders, and welcome to another engagement to the American non-farm payrolls for the month of May. So, very exciting and very intuitive session coming up as we are hoping and expecting that the big surge in the last non-farm payroll numbers is going to actually increase and exceed the previous one. So, before we get into that, let's just go over a few things. If you need to contact me on any questions about the NFP or any trading material whatsoever, I'm always available on my LinkedIn account and you can get the details here. And this video will also be published on YouTube where you can play it back and get all the latest tips and information going on from there. So just a quick disclaimer before we get into it. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public and only risk capital should be applied. This webinar is provided for information purposes only and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex does not guarantee the accuracy or completeness or information of any analyst supplied. So with that being said, we've got, as I said, very exciting, very boyish mood in the analyst expectations. So let's just have a quick look at the tables that we've got here. So the previous NFP was quite staggeringly higher than what we thought it would be. 916,000 new jobs added for the previous month, and you know, it was very buoyant because, as you can see here, March's data, April's release beat expectations by over 250,000. Which was very significant, and even now the consensus is that it will be higher in the last. I checked this in the last hour just to make sure that everything's up to date, and 978,000 is the new target. What we're looking at now, so even to get near the $1 million, 1 million job barrier is very significant for the American economy as it tries to get back on its feet. So as you can see here, the previous data that we've seen on the NFP numbers, we had the record decline, and this was in the April of last year. Such a derogatory time in the American economy, in all economies really, but if we'd focus on the NFP, very significant blow to the economy. We picked up in the jobs front in the next few months after that, naturally, as economies reopened after the first wave of the pandemic. But obviously since then we had the second wave at the back end of 2020, which is when we saw the numbers go into negative territory once more. And slowly but sturdy and steadily, numbers are creeping back up to the 1 million mark. And if these numbers keep on pushing, then we can see a lot more buoyant mood in the next quarter at least. So very significant there. Other things to mention, optimism is very much heightened at the moment. The American economy is trying to get back on its feet. Jobless claims as well. We're going to look into that a bit more detail in a second, but jobless claims remained under the 600,000 mark for the fourth week in a row, which is quite staggering as well because, if you remember, as I said, we'll look at the charts soon, but as we came out of the second wave of the pandemic, it was pretty much close to 1 million jobless claims per week for quite a few months. So to fall from that $1 million bracket and start pushing below the the 1 million jobless claim bracket and fall to the 500,000, that is very significant as well. ADP figures, private sector jobs, they were up, but they missed expectations by 58,000, but it isn't really such a big blow to the economy at the moment. So, I mean, if we look at what Joe Biden's done in his first 100 days, he's trying to basically pump as much money as he can back into the economy, making more payments, weekly allowances for those people out of work, $1,400 checks going out, and also the $1.9 trillion COVID relief that was actually passed. It's looking pretty good at the moment. We'll just have to see how much the economy is going to suffer when it starts needing to pay back these loans. The recent executive order that Joe Biden has done has raised the minimum wage of federal contract workers up to $15 an hour, and this was up from $10.95 previously. So we are looking at minimum wages to increase as well as we go on, which is quite significant as well. So just looking, first of all, this is the jobless claims. I just wanted to show a graph at how far they've dropped since this time last year. So as you can see, this is the 1 million mark, and we were just precariously hovering below that for quite a few months until roughly about January, February time. We started to see a little bit of a further dip. Obviously, these are out every week, so it's actually quite good news that we can, tangible news that we can hold every week rather than probably once a month or even twice a month. So it's very, very significant here that we did drop to under 500,000, and this is the lowest level since March 2020 when the pandemic first hit the US economy. Private businesses, as I said, ADP numbers, they saw the fastest job creation since September, and it's very, very good. Even though it's missing expectations slightly, it's still reaching some certain targets to give a hint of optimism for the next quarter at least. So we're in the middle of quarter two now, just at the beginning of May. We've got June until we get out of the second into the third quarter. So looking pretty good at the moment. We're going to see what the NFP figures have in store for us as we go on to the next round of the in data. Annual inflation rate in the US increased to 2.6. As you can see with the inflation, we went to almost negative territory at the at the first wave of the pandemic, but it's slowly starting to creep up as well. This is the highest reading since August 2018 as well, which is very, very significant. Highest reading in almost 4 years, and upward pressure coming from mainly electricity and gasoline as well. A jump in material costs coupled with supply constraints are pushing producer prices up, and some companies are passing that on to their clients. So naturally, inflation will start to slightly creep up eventually. We'll just have to wait and see how much it's going to go. As you can see here, 2018, we had it at nearly 3%. Will it surpass that this year? We'll have to wait and see. Even Janet Yellen, the Treasury Secretary, did state that they might need to increase inflation to make sure that the economy is getting back on track. Obviously, we'll have to wait to see what Fed Chair Jerome Powell has to say for that in his next speech. So very, very interesting things. So these are which economic indicators that we tend to look at to give us a better idea on how the economy is going. So, we've got ISM, servicing and manufacturing. Obviously it speaks for itself. Manufacturing and service sectors signal an increase or decrease in employment activity. The more that, PMI data as well is a very, very interesting subject to talk about. Challenger job cuts and jobless claims that we just looked at. Challenger job cuts we'll see shortly as well. ADP as well provides monthly employment data in the private sector. So as I said, it did miss expectations slightly, but not too much, and it is actually growing on a monthly basis. Consumers' confidence, University of Michigan, this is a very, very important, you could say it's an important survey. It's been going on for over 60 years. It kind of gives a good indication and it can influence the value of stocks and bonds and the price of the dollar as well, but based on what the sentiment is from the University of Michigan. So something just to keep an eye on in general. Leading indicators, treasury yields and equities. Obviously, equities keep climbing in the last month. The Dow, S&P hitting record highs yet again. They have recently taken a slight, let's say, break for a week or so, but the consensus is that it will keep pushing. And crude oil as well, we are looking, it has taken a little bit of a hit in today's session, falling in this week, falling by roughly about $1 or so. We can look at that shortly, but we're just waiting to see what the next if there's going to be more upside or downside for US oil. Obviously, with the coronavirus pandemic, vaccinations really taking a good rollout across America and Europe. Europe is finally catching up to the UK. America is also ahead of Europe with the vaccination inoculations as well. So we'll have to wait and see how that's going to affect oil. Obviously, going from negative territory this time last year to now going, managing to stay above $60 for the majority of the last month. It's a very, very good indication that there's going to be some good demand for oil, travel and all these other concepts that obviously involve oil as well. So very, very interesting there. So as I said, just looking at the pros and cons now, Services and manufacturing are slightly down this period, but the job cuts are a bit less than what was expected. As I said, jobless claims came in a lot less. And this is very, very significant as well. And we're just also looking at ADP as well. University of Michigan consumer sentiment, as I said, it's very, very significant. That's quite up as well. Consumer confidence and core retail sales as well. Now, we did touch on core retail sales before, and we just wanted to see what the purposes are of retail sales, how it is affected. This time for the next retail sales, which is next Friday, it is not supposed to be as much as 9.8, but with a significant growth here, from negative territory to 9.8%, it is very, very significant. It's a very big jump in prices as well. And this 9.8% was the biggest increase since May 2020, so nearly over a year, as you can naturally assume. Once the lockdown started happening from the first wave of the pandemic, we did see obviously negative territory for retail sales, amongst other things as well. But since more businesses have reopened, and since they have had this $1,400 checks that was sent out to consumers and customers in general since the middle of March, this has actually improved. And also you have to think about the weather as well. As we come into the summer seasons, we had this big cold snap in Texas and a lot of the southern states last winter, which has obviously kept a lot more people indoors as well, even though they could actually have the opportunity to go out and shop like you probably would think they would. So very, very significant that all these factors are coming together, and we are getting a bit of a better outlook on the economy in general. Treasury yields are slightly down, but they've been pretty much mixed the last, you could probably say from the turn of the year. Equities as well, as I said, slightly up at the moment, but they have taken a little bit of a dip, especially the Dow and the S&P. But looking to progress to record highs still, which is the consensus and the optimism behind it. Crude oil, like I said, down slightly, but with all the reasons that we've got for this year, it's looking like it's probably going to be very, very buoyant for US oil, crude oil in general, with the demand that a lot of people are expecting for the rest of the year to come into fruition. So very significant there, and we'll see what the implications are as we go. Now, choosing the best pair to trade, we just have a quick look at what the interest rates are at the moment. Obviously, Switzerland is still in negative territory. United Kingdom is still, and Australia is still just hovering over the zero barrier, and the UK, the Bank of England, obviously saying the last couple of months they're not afraid to go into negative territory, but we'll wait and see if that becomes a thing to talk about soon. So at the moment, I did this just before I went live with the webinar. The euro was actually quite strong against a lot of the other currencies. So was sterling. So we're just waiting to see now what the differentials are when we're going into seeing if we can really get a good pair to trade as well. And Canadian dollar, we have some news for that at the same time. It's always interesting when there's strong Canadian dollar news at the same time as the NFPs, because we want the NFP to be performing. You could probably say the last couple of years, it has been a bit of a non-performing payroll, in the sense that it only really has jumped to about 30 to 40 pips at a certain time. So we'll have to wait and see what the outcome, if that is. So, if we look at divergence from interest rates from one country to another, looking at the chart, see what the biggest divergences are from each currency as well. So, if you're trading euro against the Canadian dollar or the Aussie or the yen, it is a good point if we put a buy position in if the euro is strong and those other currencies are not as strong. At the moment, the dollar was a little bit down, but there is a bit of optimism. But then again, saying that, it could have already been priced in, because the dollar was moving in a downward trajectory in the early Asian session this morning, and also when the European session opened as well. But we'll look at the charts shortly as we just go for the remainder of the NFP presentation. So as I said, we're just looking at what currencies to trade. So, euro, dollar, yen is always a good currency to trade when there's, high impact fundamental news such as the NFP. High volumes and high liquid pairs, spreads and slippages will not be too high. But trading the NFP at this particular moment, you have to be careful. But we'll go through a few things to look out for shortly. So as I said, a weak currency look. We look at the shorter term for weak currencies because when certain news events are released, we don't want them to get away from us. So let's see on other things just to protect your risk capital as well. I always go through this because these are just basically a few of the fundamental things that we need to just make sure we've got our head screwed on the right way and make sure we're not making any mistakes that could potentially be quite detrimental to our trading. So basically avoid trading during the NFP altogether as high volatility and the high whipsaw effect could lead to losses that exceed profits. So this is just basically your standard 101 problematic trading when high volatility markets are really starting to take their toll and you can't catch that particular price. Apply protective stop loss and take profit risk management measures in order to bypass emotional hurdles. So we've all been there, we've all done it, we've let our emotions probably get in the way of making the right trade. We just need to make sure that if we are making a loss, that we put in a loss that we can afford to lose and don't let it run. I would say never let the loss run and only let a profit run. We have to be smart and make sure that we're closing losses that we can afford to lose, and that will not affect your equity and your risk capital in general. So number 3, close out all positions, if any, ahead of the release in an attempt to divert from high volatility and range risk. So again, it probably goes back to point 1 where if you don't want to trade high impact news, just close your trades, because sometimes we hear slippage all the time, or we hear gaps in the market because if the price isn't there in the market, then it cannot the trade cannot basically be closed at that price. So it'll be closed at the next available price, which could lead to you exceeding a stop loss in general. So if you basically put a stop loss here and the next available price is here, then the trade is going to gap close at this price, and then you're going to lose a lot more. Conversely, it could work on a take profit as well, but it's a risk that we don't really want to take. So close out all positions before you even get to that stage if you're not comfortable with trading high impact news events. Hedging your positions. Hedging is a good strategy if it works as well ahead of the release, in case your risk is minimum because you trade long term and the stop loss is far away from being hit. So if you just want to kind of consolidate the profit and losses, you want to hedge the position. So even if the trade is going a bit out of control and your stop loss is quite far away, it's not as if you're going to lose a lot of funds, and by hedging you're kind of protecting your capital as well. So it's just something to look out for as well. If you're eager to trade despite the warnings, do let the markets calm down before entering a trade. That way you circumvent the heated environment and also have a cleared picture as to where the markets could be heading towards as market noise is reduced. So basically, market noise is basically the ripple effects of the news event that has followed the the news coming out basically. So with the NFP, the ripple effects or the market noise could last for maybe 20-30 minutes afterwards. We could get retracements, we could get sharp reversals in the market when it has spiked up. So if the euro dollar pair, for example, spikes up 50 pips, there is a big chance that it could actually retrace. And if you don't want to get into those positions, then it's better to let the markets calm down before entering a trade. This could even be maybe 1 hour after the fundamental news event. It doesn't have to be an NFP event. It could be an interest rate decision from a central bank. It could be anything, retail sales, or even a economic sentiment. So just something to have a look at as we look at all the things to take into account. Analyze the data post-release, so not even pre-release like we're doing now, post-release as well. Without supporting employment, wage, and unemployment data, any directional trade is at risk of a reversal despite the NFP is over, as post-effectual bias depends on all 3. So like I just said, even though the NFP is over, there is a risk of a reversal. So usually a market can jump and then keep on going, but at other times it can spike, and then you'll see that there is a quite a sharp reversal, and it can even plummet in the opposite direction even further than what it would do normally. So just something to pay attention to there. And also, lastly, pay attention to the divergence between actual and consensus figures. Gaps of 20, 30k are not considered much effective. So this is basically if the NFP comes out at 10,000 jobs more, there probably won't be such a big reason to shout about, or probably even to enter a trade. You have to see if there's a big gap, big divergences with the consensus information and the actual confirmation to see if there's really worth actually getting into a trade and risking any capital or any of your open positions that you might have already. Because obviously if you've got open positions and you want to trade on a high impact news event, then it's going to obviously affect your open positions as well. So just something to look out for in this sense as well. So that's the end of the presentation. I just want to look at, just picked up a basket full of the main pairs to talk about and have a look at. So euro dollar, first of all, just going to see what the potentials are. I've got all this on an hourly chart. As I said, the euro dollar in the morning session from lunchtime has pretty much, as the European session opened, has pretty much fallen by about 25 pips. As you can see, a very choppy market, rising by almost 30 pips and then dropping now almost by 30 pips. So we'll just wait and see what the effects are there. If we're looking at levels here, obviously we're looking to break this top of the 120.80 or 90 barrier there, and on the downside we'll be looking to see if we can get through morning lows as well. So this will be very significant for myself, so roughly about the mid 120 handle there. So we're just looking to see what the potentials are and where we're going in that respect. So if we just go from the recent top to the bottom, I don't think I put that in there properly. So if we just put a Fibonacci on the potential retracements at the moment. So we're looking at the 38.2 roughly, which is it's pretty much a confluence of the morning lows, and at that mid 120 area as well. Pound dollar as well, very significant over the last few days. Obviously we had the Bank of England announcement that interest rates will be kept as they are. I'm going to put this on the 30-minute chart just to see a bit more of a range, and as you can see, this big spike here, but since then we've had a bit of an accentuation, a little bit like euro dollar. From the European session we've started plummeting slightly, and this is roughly about the same, about 30 pips as well. So again, if we can probably get through that barrier of the morning lows, roughly about the 138.90 level, and then if we can obviously get past this top as well, if we do break these areas here, a few full spikes, as I said, this is on the 30-minute chart, but if we do break these levels here, then I'm expecting a bit more upside for pound dollar. Dollar yen, on the other hand, we're just looking this as a safe haven. Just zooming a little bit more, with very, very choppy action from most of the morning there, and even from yesterday. Just waiting to see if we're going to start spiking up. Very big wicks at the moment for the euro dollar. Again, this is on the hourly chart. If I bring it, even if I put it on the 30-minute chart, we're looking to see if there's going to be any more upside. And again, I'll be looking to see if we can eclipse these spikes here. Very significant levels here, and just at the 108.30 approximately, and obviously morning lows are taking into account as well. Quick look at the Dow. I just want to bring this on a daily chart first of all and just see the accentuation. We're at record highs at the moment. Doesn't really look like it's slowing down anytime soon. Obviously with more COVID relief pumped into the economy, there's a lot more for the technology sectors and the big earners to really get excited about. A lot more people spending their $1,400 checks as well. So we'll just have to wait and see what the potentials are for that. But in my opinion, it looks like it's not slowing down anytime soon. We're having a little bit of a tiny bit of a hourly reversal there, but nothing really to be a cause of concern if you're a bull in the market. Dollar CAD, just finished off the major currencies. Again, we have had a bit of buoyant news on oil, so we are expecting a bit more of a move in the long term for dollar CAD as we get into Q2 and as we enter exit Q2 as well. So as you can see, it's been the worst in 3 years for the dollar CAD. I'll just show you that on the chart now as we pull back. So, you know, even on the weekly chart, I'll put it on the monthly chart, we're not even out there. So, you know, the last time we had this spike here, you know, we're looking at 2017, very, very significant. And, you know, it is actually starting to pull back slightly, but we'll wait and see if that's going to happen anymore with the recent news that will come out on the Canadian dollar side. Gold has been talked about for the best part of the year since it went to record highs during the pandemic. We are seeing a bit more of an upside now from the morning. Not only did it eclipse the 1800 psychological handle, which is roughly about here, it has actually maintained as well, and now we're looking at the 1820 for it to stick. And if it does, then we'll be expecting a lot more upside from gold as well. You know, we do see gold as a bit of a safe haven, but we'll just wait and see how much of a safe haven it is as we go into more, you know, the pandemic. It was a big factor with the vaccination rollouts, why it went up so high. And, you know, if we go pull it back to weekly, you know, we've got these two, you know, where it surpassed the $2,000 level, and now, you know, up to over $2,050. But as you can see, a gradual decline, and now we're seeing prices starting to pick up slightly. This is on the daily chart, so we're just waiting to see what the potentials are. And as I said, I'll be looking if it's bullish. You know, we're going in $10 stages at the moment, so $1,830 will be my next target for gold. So just keep that on a $30, 30-minute, and just see what the potentials are there. And lastly, just looking on oil before we actually count down to the NFP data. So oil as well, as I said, from the morning, not looking too good, a bit waning quite a bit from the last time it had its lofty highs a couple of days ago. This week has seen quite a dramatic push and pull on oil. So, you know, we had a few reports by the API and EIA which made it fluctuate slightly. But, you know, if we're looking at oil, the long-term prospect is supposedly up to $70. Again, we'll see if that comes into fruition, as well as we're looking to see if we can really start getting a bit of momentum behind oil to start pushing to $70. At the moment, it's just going towards the lower end of $64. So it's nothing really to get too concerned about if you're looking for oil to start picking up. But at the same time, we'll wait and see what surfaces as well. And just finally, the S&P 500. Similar to the Dow, we're just waiting to see if the S&P is going to start picking up to the recent spike here where we saw record highs again. The impetus is on the upside as well. And again, we're just waiting to see if it's going to surpass the $4,210 mark, which it's currently on now. If it does, then, you know, happy days for a lot of, you know, a lot of bulls. So we're just waiting now. I'm just going to bring all the charts down on 30 minutes just to get a bit more of a perspective whilst we await the NFP data in the next few minutes. So as I said, a very good first 100 days for Joe Biden. He's basically eradicated a few of the of Trump's legislations that he put in, his executive orders. And, you know, the first 100 days is usually where a new president is making his mark. And, you know, as I say, he signed a flurry of executive actions in that time and dismantling many of the former President Donald Trump's policies as well. But, you know, more significantly, he's trying to push through more stimulus. And also on top of that, he's actually taken away a lot of Trump's orders as well. So the minimum wage for federal contract workers, like I said, up to $15, so very significant there as well. And as we just wait to see what the potentials are for the next few trading sessions. So just keeping an eye as the news comes in. So markets are fluctuating at the moment, and here we go. So we're seeing a bit of an upside for the euro dollar at least. Just waiting for the news to filter through now. And just waiting to see what the numbers are slightly. So it's actually not as good as what we thought it was going to be. It is actually 266,000 new jobs were added, so quite a big move away from what the projected was. And as you can see, the euro dollar pair has actually jumped. Very weak dollar at the moment. Dollar yen is actually pushing through. So now that we've broken these levels, I'm expecting the price to keep pushing for now. So very, very exciting news if you are a bull in the market for the euro dollar and pound dollar at the moment. Very weak dollar looking into it. And we're just waiting to see what the repercussions are at the moment. So just getting my data here. I've got some other places where I'm getting some notifications as well. So yeah, very significant moves there. Gold, you know, as I said, with gold looking in $10 stages. Now I'm looking at the 1830 and it looks like it's just about there. If it touches, there we go, bang. So that will be a very, very nice buy position from the 1820 to the 1830 there as we go into the first couple of minutes after the NFP. And let's see what other information is coming out at the moment. So yeah, the consensus was 978,000 and the actual is 266,000. Some very, very poor jobs numbers there. It is actually a positive number at least, but we are looking to stay in positive ground and not negative territory for now. And you know, on top of that, it is actually for a very weak, a very weak dollar as well. Same with dollar CAD as well. That's actually dropping. And the Dow and oil. Oil has remained slightly muted at the moment. Not really much going on with oil. It doesn't seem like it's really pulling in any attraction from the NFP. But as you can see here, euro dollar, we've passed the expectations of the barriers that I put in before, and now we're starting to push higher and higher. But we can see what the potentials are for euro dollar. I'll just put it onto a 4-hour chart, and as you can see here, you know, we've gone over the 121 barrier. Average hourly earnings as well for all employees on US private non-farm payrolls went up by 21 cents. So that's something as well to keep an eye on. Just when you're looking at the whole overall picture of the economy, you have to take in obviously hourly earnings, salaries, and all these kind of things. So very interesting there as we go into the first 5 minutes post NFP data. So quite a big move in the market at the moment. Let's just check what we're looking at the moment. So we're up nearly 50 pips, pound dollar as well. We're up over 50 pips. So very, very significant move there. And the Dow is actually plummeting quite steadily. So just waiting to see the next news. Yeah, so I mean, the previous month was now downwardly revised by 770,000 jobs, but even though we had 916,000, that's been revised downwards to 770,000, which is quite a big drop as well. It doesn't escape the big drop of 266,000 new jobs for April 2021. So we'll just wait and see where it's going. Notable job gains in leisure and hospitality as well, but I think leisure and hospitality in general are the main drivers of the economy at the moment, because these are the ones that have been these are the jobs that have been on lockdown for so long. You know, even around the world, in Europe, the UK, they are looking to get back to normal, and obviously these jobs are going to be under scrutiny if they don't get everyone back to work in these particular fields. as I said, there's Canadian news as well. The unemployment rate in Canada rose to 8.1% from 7.5% in the previous month, and above market expectations of 7.8%. So again, unemployment rate in Canada wasn't great, but it has, because of the poor NFP, we are seeing a dip in prices. So I believe if we don't touch this previous low from a few sessions ago, then we won't really probably break this particular line. I'm expecting that to have a slight reversal in the next session at least. So not too much in the way with the negative unemployment data from Canada. 25 pips is a little bit better than the 50 pips that we're seeing on the other main currencies as well. Other than that, we're seeing, as I said, let's just check the S&P as well. So S&P pretty much muted. We've got quite a nice doji there. We've spiked up to the previous high, but it hasn't broken it. And now we're probably looking to see if that's going to have a sideways range for the majority of the rest of the trading session as we go into it. So we're just waiting to see what that's going to be in the next few sessions. So let's wait and see shortly. So things to look out for, we've got reversals. This is very, very significant, where we want to put a trade in, where we want to put reversal in. At the moment, I don't want to touch it because it seems to me like it's going to keep progressively going downwards. But if you are looking at retracements or reversals, we have to wait until probably about 25% of the candlestick is going to start retracing, and then we can probably start putting in certain points for either buy stops or sell stops, or you can even put limits in as well to see where the best opportunities are for the next few sessions. So let's just pull out the euro dollar again. So at the moment, I'm just going to expand these levels here. So we've hit the 121.35. I'm going to put it here for the next range, this double top that we saw recently, 121.40, something like that. A few pips away, give or take a few pips. We'll wait and see if that's going to reach as we just go into the first 10 minutes after the NFP. The dollar yen though looks very, very dramatically on the downside. Let's just put it on a 4-hour chart to see where we stand. So as you can see, price is really starting to take shape now. I'm looking at these next double bottoms, 108.45 as well, to give me a really good sense of direction for the next couple of sessions as well. And the Dow, probably expecting the Dow to start pulling back now. This would probably be a good time to put in a buy position, as certain things amongst the Dow do not always stay, because as I said, the American economy in general is looking very good, even though we have had a bit of a bad NFP for the the American job markets. We are looking like progressing in general as we go into Q2. So looking for the Dow to start pulling back as it is doing now. S&P, as I said, now it's starting to push up. These kind of indices are really starting to probably digest the information, but also not let it take its toll on the recent job numbers as well. Pound dollar as well. This is obviously the effect of the dollar. Very, very bullish motive there. I mean, 60, 70 pips rise. It's very, very significant. And as I said, I'm looking at this double top now to see if it's going to reach roughly about the 140 area, which is very, very quite a good psychological confluence level there as we go into it. So let's just see what other information we can probably get from the figures that were released recently. So we've got the unemployment rate as well from America. That rose to 6.1% from 6%, so nothing really to shout about there. It's always been hovering, well, not always, but the last few months it's been hovering at just over the 6% mark. It dropped to the lowest since the pandemic started to 6% in the last month, but for it to rise to 6.1%, it's not really something to, well, it's not really a cause for concern at the moment. As I said about the average hourly earnings, they were slightly up. And now we're just waiting to see what the changes are, for the rest of the economy. And we'll see what the opportunities are as we cap off the first 10 minutes after the NFP. So quite a few things to take into account. As you can see here, almost a full reversal for the dollar CAD. I believe this is due to the fact, as I said, the Canadian news wasn't so great. The employment change is back into a negative territory, minus 207.1 thousand, which is quite significant as well. The consensus for that was a little bit better at 175,000. So we'll wait and see what's, as I said, I think this is due to, this is the reason why that we've almost had a full reversal on the dollar CAD. Gold, on the other hand, as I said, I'm going up in $10 stages. We're going up to the 1840 now. I would have put a buy in at the 1820 when we started seeing a bit of a upside. And that's a nice $20 profit depending on your lot size that you've taken out. $20 times the contract size is quite a good, nice little profit for the afternoon as well. Obviously look for some pullbacks there as well. Oil, as I said before, not really too affected by the news. We are seeing a bit more of a downside now in the last few minutes. And we've dropped by about 12 cents depending on your contract size as well. It can be a bit significant, but quite a choppy range for oil. If you look at what's happened from the morning session, this was when this was the early Asian session this morning. As we've dropped down, we've picked up again. Now we're dropping down again, a bit like a dead cat bounce, you could probably say, as we await a bit more direction on oil. As you can see here, it's actually dropping as we speak. Let's put it on the 4-hour chart to see what the levels are. So as you can see here, we're just looking to see if it's going to get to that $64 psychological handle and then start moving lower than that. So something very, very significant to look out for there. And if we do eclipse that, then easily to say you've got the monthly lows there from the beginning of last week down to the lower end of the $63 barrier. So again, very, very significant there as well. And the Dow's kept on pushing down, but as I said, I'm expecting it to start retracing at some point. Excuse me. So we could see a bit more of downside for now with the Dow. Obviously, with only 30 companies, that makes it up. It's more affected than the S&P at these times of the process with fundamental news events. Dollar yen as well. So now you can see with the euro dollar and pound dollar, we are seeing reversals. It's just the gold that we are looking at to keep momentum pushing. Sorry about that. And yes, so pound dollar, we're looking at almost a full reversal now. 14 pips that it's gone down to. And with the euro dollar, looking at a little bit more of a push. But as I said, anytime there is a big spike in the market, always look for that reversal point. As you can see here, we have had opportunities for reversals. The dollar CAD has made its way back to full reversal as well. So let's just see what other news we're looking at the moment. So in April, non-farm employment is down by 8.2 million or 5.4% from its pre-pandemic level in February 2020. So also shortages of skilled workers and supply of parts and materials could hurt factory employment in the short run. So if you do watch the stock watch videos that are done on a daily basis by myself, we have been noticing recently that the shortages of certain chips that go into manufacturing because of the pandemic have hurt a lot of companies, a lot of automobile companies as well as tech companies as well. you know, such as Apple that are creating their new iPhones and other technology software that these chips are going into. Because of these chip shortages, it is actually affecting a lot of the outcome of profitability for companies. So once that gets back on track, hopefully we can start looking towards the future with a lot of buoyancy as well. So quite an astonishing figure there. So employment since the start of the pandemic is down by 8.2 million workers. So 5.4% of the American industry is actually down. So it is actually quite a big number there that it has to try and get hold of. So Joe Biden does have a lot on his hands when trying to get America back on track. So gold just kind of precariously hovering below the 1840 handle. But if it does start retracing, then 1830 is probably where I will close out my position, and it will still leave me with a good profit of, you know, depending on the lot position that you've taken out. So that will be my target there as well. Dollar CAD, you know, full doji now. Dow, I'm just expecting Dow to start coming up to roughly this previous level of 34,500 and probably 20 or just a few pips, a few breadcrumbs around that area for the rest of the session as well. And there'll still be a lot of traders in the market because it was quite a big move. I haven't seen a move on that end of the NFP in quite a while, you know, especially the euro dollar moving up to almost 80 pips. Same with the pound dollar, dollar yen as well, 70, 80 pips as well for that. Very, very big move considering the previous NFPs, which have been non-performers, which we've only seen roughly about a 20 or 30 pip move. So in this day and age, a 20, 30 pip move, unless you've got a big lot amount in the market, you probably won't really see the results, and you won't really get any positivity back from that move. So oil still moving downwards as well, and as you can see here, there we go, we've broken that $64 barrier. So I'm expecting now probably the next level to be the recent lows, so moving into probably the mid to lower range of the $63 area, and that will be my cause for concern if oil is going to keep plummeting as well. Obviously this is the NFP, so as the ripple effects, like we said before, with the news that's going to be coming out in the next quarter, we are expecting a lot more demand for oil and urgency for oil. So, you know, Joe Biden's big statement that he's going to go more green and, you know, stop fracking, and also invest more heavily into electric automobiles, for example. It's not going to happen probably in the first year of his time in office. So we are looking to see that oil will be in big demand for the rest of the year. So as you can see, the Dow is just creeping up to my mark here, and if it does surpass, I'm expecting a bit more of a retracement as well. So I'll be keeping an eye on that for the rest of the trading session. As there we go, it's just on the line now, so we'll just see if there's going to be a bit of support or resistance at that particular level. Quick look on the S&P as well, and you know, as I said, expecting probably a sideways range for the majority of the recession now. There are, as I said, there are still traders in the market. When it's a non-performing payroll, we are looking to see traders probably start their weekend early, and in this case it's probably not going to happen anytime soon. So we're just waiting to see what the results are at the moment. So just put that level back in for that double top, roughly about the 120, 140 range. We are slightly creeping up, back up there again. Put it back on the 1 hour, 30-minute chart. So, you know, as you can see here, bulls are definitely still in the market, and we're waiting to see what the next levels are here. And the same with pound dollar as well. Gold, as you can see, it's just under that 1840 handle. So very, very exciting for gold traders there. And the US dollar is, the Dow is just making a decision at the moment. We're just waiting to see where it's going to start pushing or pulling as we go, as we hit the first 20 minutes after the NFP announcement. So no further news to bring you. In closing with this presentation, I'll just let you know, like I said, I'll leave you with the tips that we looked at on the presentation. Always make sure that the ripple effects of whatever news event that you're trading calm down if you want to enter trades after the news result has been given. Obviously now, as you can see, the markets are still moving quite vastly. So if you want to avoid this altogether, then wait at least probably an hour or so afterwards, or when the markets have calmed down, because the euro, this for example, can retrace full in the next hour, and you could actually see it as an opportunity, or you could see it as something that you don't even want to touch at the moment. And there probably won't be any more slippage now because of the big vast move that happened. I'll put it on the minute chart, and as you can see here, so what I'm just going on about slippage is, you could have had a buy stop at this level, and as the markets, as the news release has happened, we've gone from this level, bang, all the way up to here. So your trade would have been closed roughly about, let's just call it 120, 180, and it could have completely missed your take profit, or stop loss, depending on which way you enter the trade. So just things to look out for when you are trading high impact fundamental news events. This target, basically, if it's not in the market, if there's no price in the market, then it will not be, it cannot be closed at that trade at that price, because there's no price in the market. It's closed at the next available price. And then this is the risks of trading high impact news events. So very, very significant. So as you can see, this high impact news event now, 40 pips within the first 40, well, nearly 50 pips in the first minute. So very significant. And look at that candlestick. That's a 30-minute candlestick, and that's a full bodied to the upside. Very, very rare, you could say, that we see these kind of candlesticks that have no wick or a very, very small wick on each end in a 30-minute chart. So very, very significant there. Dollar CAD just slightly opening up again, and then we've got, there we go, we've got gold. So now that we've eclipsed the 1840 again, as I say, I'm going up in $10 ranges. 1850 now is my next target. And if you think in the last 20 minutes, 23 minutes or so, we've gone up nearly $25 in gold. Very, very significant, very, very powerful move. And depending on the lot size that you took out, I took out 2 lots on that pair. So, on that commodity. So looking very, very good at the moment. And now the stop loss will be at the just under 1840. I have to give a few pips leeway, but if we do see a retracement in gold, then it'll be very, very significant that you put the correct stop loss in. Don't let your loss run, that's for sure, if you're on the other end of that trade, and you can get in and out when you can. And there we go again. I'm just waiting for this Dow. It's been a bit sneaky now, as you can see. It's just on the edge of where I put my retracement level, and it's just undecided at the moment by a few pips. So I'll keep an eye on that as I go throughout the rest of the afternoon, and we can see what the potentials are for the rest of the afternoon as well. So yeah, dollar yen, as we've done this double bottom, there is potential for it to keep on pushing, being pulled downwards as well. So what we've got here, we've got the 108 psychological level. It's very, very easy for that to hit. Not far away at all, 40 pips. If you think about, it's actually moved nearly 80 pips in this last 25 minutes, then very, very significant. So as I say, I'll leave you with the recommendations of, if you don't want to get into these trades for the high impact news events, avoid the market noise, wait for the ripple effects to go. if you are still in trades, then keep monitoring, because the whipsaw effects and everything else can really start moving to the downside, and we can really start going and seeing where it is. So that's all from the NFP for this time. Thank you very much for joining me, and as I said, I'll leave you with the knowledge that we're going to see what the NFP has in store for next time. Obviously 266,000 jobs being added is quite significant, so we'll just wait and see if next month we get more of a growth on those jobs. It is expected to be, especially as the economy starts to open up and Joe Biden's policies really start taking effect now. So just something to think about in the next few trading weeks ahead until we meet again for the next NFP. So again, thank you very much for joining me, and see you again, and good luck with your trading. Bye for now.